Good afternoon, and we're live from the Forex Expo in Dubai yet again. I'm joined by Tony Cross, the Armchair Trader, for our conversation today.
Afternoon, Fraser.
Great. So we're going to be talking about IPOs in the UAE. Are these oversubscribed products or undercapitalized? So something that I noticed as personally as a trader, I've been in the market several years, that, you know, in Europe, for example, there's a dearth of IPOs coming out now. You're seeing a few in the US, for example, still as the main market within the NASDAQ and that. But in the UAE, it seems to be gobbled up very quickly. In the last 3 years alone, we've had nearly 35 billion dirham. So, $10 billion in IPOs in a very immature, new market. Where do you see and why do you see this market growing so fast?
I think there's a massive amount of untapped capital, uninvested cash just sitting on the sidelines. People are looking for quality homes for this. So the listing requirements in Dubai and Abu Dhabi, whilst there are base level achievements that need to be met, they are very keen that a lot of the locally privately held companies are listed, come to market. And what we're seeing is people want that exposure to equities. So when these listings take place, bang, the money's coming in with a bomb. I mean, Spinneys, the supermarket group, was one just earlier this year that stood out.
100%. I think we saw great P&E from them. I think we had, was it a 64 ratio or 64% oversubscription in the assets. And I think it's not only just that. I think you're also seeing the family offices moving into the seeding funds. You've seen with Bolero, some of the family offices, the sovereign wealth funds going into Revolut, going into new products. So do we see that more as the traditional Europeans, Western companies are now coming to MENA to list an IPO?
Well, I think there's a limitation on that to an extent because of those minimum requirements that you need in terms of the trading history locally. But with a longer term time horizon on it, why not? If you think, well, I want to list in 5 years' time, then should I be thinking about setting up an entity in the UAE?
So maybe Aramco jumped too soon. Maybe they should have waited. And I mean, something I've heard and something, again, you mentioned there with the untapped cash. The one thing I heard here is like, whereas everyone goes after Berkshire and Warren Buffett because they have the biggest cash reserves, you're looking at there's 10 or 20 of him and that kind of capital sitting in MENA. So is that why you're seeing it? I know on a regulatory perspective, people have to open offices here, have the presence. Maybe you can expand on that for our viewers a little further and explain to them the intricacies around actually listing that.
Yeah, well, I think those requirements, I'm not fully au fait with them, but I do know that you have to have that, that trading history. You need to have a local presence, so you can't just do it remotely from Europe. But I think what we see laid out in the price action, in this massive oversubscription we see for the shares when they come to market, and then beyond that, the fact that the prices don't go crazy once they list, the listing price seems to stick there or thereabouts. So
I mean, that's something, again, that's a very interesting factor. If we take some of the, let's say, we'll avoid Europe for now, because it's not necessarily a good example with the amount that come out. But let's say if we look at the US market, we look at the last 10 years of the big listings. So we look at Snap, for example. Snap is the initial IPO 6 months before listing, was trading around $26, $27. I was a very lucky individual who managed to get in at an early level. I think on day of launch, we were up to $54, $55, $56. It peaked up 24 to 48 hours after launch to around 80, and then we had a massive crash down to 30. And that's something you're saying that you're not seeing this in
Not seeing it. You may see a slight overreaction and then a mean reversion, but the reality seems to be that these listings happen. The wannabe investors are happy with the valuation. If they get scaled back or don't get their order filled, they're not rushing in to chase to buy it at any price.
So are you seeing this, maybe it's because more of a P&E ratio? Are you seeing it because people are long-term investors and more maybe in the West, they become speculators within the market?
I think that's right. There are some signs of stagging taking place, especially on some of the spin-out IPOs that we're seeing. But it's that long-term investment. People are happy to buy in to the quality stocks at the levels the banks are saying. And if they're not getting in at that point, they're not going to chase it at all costs. Because as you say, that starts to have a derogatory effect on the P ratio, on the dividend yield, on all this kind of stuff. If you're just chasing your share price higher, people are quite happy to leave that cash sitting on the sidelines. When the money comes, when the next opportunity comes along, they're going to be in there for it.
So let's say, like, we're obviously talking about Western companies potentially coming here, they're changing the demographics. Let's take someone like Standard Chartered, a worldwide bank, very large presence in the UK, very large retirement holdings. and their traditional market is going within the FTSE European markets. Do you think this is where we're going to see that next move away from the private investors to the actual banks coming here and the retirement funds and putting their money into the market?
Well, looking at a market level, one thing that's very interesting is the lack of correlation between the Abu Dhabi and Dubai markets and others globally. You do see it to a degree, but not as it's not as amplified. So in terms of being a long-term store of wealth, I think there's a lot of potential there. And there are some good dividend yielding stocks in there as well. So I think in terms of the long-term outlook, why not? Well, it should be on the radar.
And I think, something you see, especially in the UAE exchange, within the Saudi exchange, and even within the Abu Dhabi exchange, there's a lot of industrial companies. And you're starting to see that homogenesis, very much like Europe had for years, America, we're seeing the trade battles. You're seeing MENA not only buying from people now, but producing within its own region, potentially becoming a net exporter. So these companies obviously are only just going to grow. They need to expand. So potentially the next aspect for them is doing IPOs, getting the cash capital to expand their operations. Kind of around that aspect, you would say, maybe.
Absolutely, yeah.
Brilliant. Now, something we've touched on is a few banks. Now, there's obviously a lot of sovereign wealths. There's a lot of private families and family networks who have traditional ties here, whether to be nationality or they've been here 20, 30 years. Let's take Tesla for a prime example. A very murky company there with shareholdings in SpaceX, then holding in Twitter, or now X, etc. Obviously, a lot of the main shareholders and backers in these kind of points are MENA nationals. Do you think we're going to start seeing the point where we start having reverse dual listings? So if we take Shell, for an example, where they were on the Dutch exchange and the British, and because they needed the capitalization, do you think we're going to start seeing them staying on the US exchange and dual listing into the MENA exchanges?
I don't know. I think that might be a stretch too far because it's so easy now to see the flow of capital cross-border. Do you think about when Shell had that dual listing, how difficult it was then? And, to buy anything other, for a UK investor to buy anything other than a UK stock.
100%.
Whether even if you're institutional, it was painful.
And then it also comes down to how do you categorize them, depending on the company you go with. Did you have preferential A or preferential B shares, and where's the point? So around these kind of points, we obviously have the growing companies. We have the market growing. So we said, as before, there was an oversubscription. So they managed to, the Dubai Exchange managed to raise roughly 35 billion in the last 3 years. But the oversubscription was up to 1 trillion.
Yeah, that's it. 30-fold oversubscribed on average.
So what is happening to that capital? Are they just sitting in cash? Are they investing in businesses? Where do you see the kind of potential for that market? And where do you see the potential growth for the IPOs coming?
I mean, I think what that suggests to me is there's an absolute hunger for equities as an asset class. People have not got enough exposure to listed equities. They want to have that flexibility. They want to have that visibility, that price transparency, the improved levels of governance that come with a listed company. So I think that that sits on the sidelines. It's going to take an awful long time for that to be consumed, but it's going to be a great success story as it goes.
And obviously, talking about the exchanges, you mentioned governance there, as well, which links us to the regulation. One thing you've actually seen is these exchanges going in and taking some of the best minds and people from the FTSE, from NASDAQ, from DAT, and bringing them in to create their own product that isn't just a carbon copy, but is a unique product for that MENA region, but also giving the rigidity of NASDAQ, of the Dow, as you said, the solidity and that confidence that people have that they know what's happening now. In terms of the mechanisms, we're not seeing huge amounts of listings at the moment. You're not seeing huge amounts of volume, which links into what you mentioned before, that people are looking at as a long-term investment. Maybe potentially, I mean, obviously we've just seen, and we mentioned before about the sovereign wealth funds putting their money into Revolut. As an attraction, and say as yourself, put yourself in Revolut's shoes. You're opening an office here, you're getting big investments. Does that IPO option into a Dubai exchange suddenly become more attractive than the launch into a Western exchange when they're thinking on the tech basis of people like Snap, where you've had that jump and sell off because people are looking for the quick buck? Do you think maybe now, as a bank in essence, a fintech, real bank, who their value is what's going to give them that growth, do you think maybe that IPO in the MENA region is now more attractive to them for that region?
there's certainly grounds for that. At the end of the day, a Revolut as a bank versus Revolut as a fintech, two very different propositions, I think, for what they require from a listing, because you don't want a bank with a share price that's bouncing around from $25 one day to $75 the next, and then back at 40 by the end of the week.
So again, you might have a product that they start to compartmentalize, subsidiarize the business down and only list certain aspects, and then keep the whole holding group that then keeps shares. That's the kind of...
that could well be an option that they consider. But, the market is evolving so quickly now in terms of, the ability to do that, the ability to work across borders. And so I know you've touched on in the past, tokenization as well. There's when Revolut, or even if Revolut eventually lists, what will the world look like then?
And more importantly, what will be the fall? And I think that's something I touched on in one of my previous conversations with the tokenization. We had it at previous expos as well. I think it's quite important to understand that where the attraction with MENA comes in from, with big banks, whether it's Nomura and having a lot of their main tokenization crypto business here, these ones, the attraction is they're open to doing business. Something I discussed with our CEO before was you can come to Dubai and you can buy a house for crypto and no one asks you for the proof of funds.
Yeah.
It's a very much a straight up transaction. The tax man's happy and everyone. Whereas I can't even send money from a platform I trade with to my Lloyd's bank because they rejected straight away. So are you seeing this as more of an attraction as well, where the movement of funds, it makes it easier for people to buy and sell? Because some of these ultra wealthy people aren't just holding their money in gold or cash anymore. They are holding large percentage of crypto. I mean, the last estimate I saw is 25 of the top 60 crypto wallets are all based out of the MENA region.
Right.
So you're seeing that aspect there with people having it. So maybe, the next move into the for the IPO space is the tokenization for buying and selling, opposed to the traditional fiat currencies or local currencies. What's your opinion on that?
Obviously, you've got a headache here because people in the wider market require a dollar or other fiat currency equivalent valuation for that asset, especially if you're borrowing against that asset. And you don't want, it's bad enough if the business's fortunes are impacting the valuation, never mind something that can be quite erratic, such as the value of crypto.
Yeah, so maybe something like a stable coin would be a lot more pragmatic, where it has like a 0.01 variance and stuff like that.
Yeah.
Fantastic. And for MENA as a whole, do you start to see a lot more centralization of the exchanges? Because obviously over the last couple of years, pre-COVID and a little bit afterwards, Saudi and obviously the Crown Prince made the moves to say, right, if you want to deal with Saudi, you have to have your base in Saudi, not in Dubai. But that seems to be liberalizing a little bit now. Do you see it where potentially the cross-strait business starts to come, where everyone has it as an exchange, but now there's going to be one centralized MENA exchange? Or do you still see the decentralization of these?
I think the biggest issue with that is the fact that whilst Dubai and Abu Dhabi trade now on a Western Monday to Friday, any other GCC countries trade Sunday to Thursday.
Yeah.
So that throws open a whole raft of questions, I think. Just that basic logistical point does leave that.
How do you operate the hours? How do you do? And I think obviously even with Saudi, where it pushes another hour forward, it makes it even a little bit more difficult trading where it's opened or closed.
And I think there is such a weight of capital that the region could sustain multiple markets. I don't think it's. I don't think consolidation of traditional markets is it's necessary solution here.
So last point I'd really like to cover, especially in IPOs, we are at a Forex Expo after all. You have seen very much a slowdown in the last 6 to 7 years of IPOs of Forex companies that are growing out. You had the back in the day with the plus 500s. Then you had, the FX Pro who cancelled their IPO. And you haven't really heard much since. You have CapEx and a few, now off with Naga Markets and these kind of organizations. But with MENA being more open to the market, with them enjoying Forex, appreciating it and expanding it, do you potentially see the next IPO of a Forex company maybe being in the MENA region opposed to one of the traditional markets?
Well, I guess the challenge with that is it goes back to that listing requirement. Can the company claim to have its headquarters here when it is more than typically not going to be regulated primarily in the region? So, I mean, obviously there are some names that that are at the show today that should tick that box. Obviously, there's going to be a degree of pressure because, as I understand it, the very highest levels in government and society, they're saying, look, if you have a big company You know, they're not talking massive. They're not talking billions of dollars here. They're talking millions of dollars. If you've got a company with a trading record in the region that it's privately held, you should be listing that on exchange.
And I think that also, as you said, it makes it more attractive to the locals because they're looking to buy. They're interested to buy. They want to trade, and they want it for the long term. Which I think for investors, especially Forex companies, especially for banks, especially for these ones where, you know, your income can change from a month-to-month basis. As you said, you don't want the share price jumping and dropping because 10% of your base is selling and 10% is buying. You need that consistency.
Yeah.
Perfect. Well, thank you very much, Tony. It's been an absolute pleasure.
Thank you, Fraser.
Guys, we'll be back in around 20 minutes. And thank you for joining us for discussing IPOs in the UAE.